Welcome back to this week's Sector Review, where we dive deep into the market's performance from August 25th to August 29th, 2025. Today, we're going to uncover the most intriguing movements that shape the financial landscape. Buckle up, because the markets have been on a roller coaster ride, and you won't want to miss these insights. Let's kick things off with the technology sector, which stole the show last week with a staggering 7.8% gain, translating to a market capitalization increase of $57 billion. The sector's bullish momentum was evident from the opening bell on Monday, with software and IT services leading the charge. These sub-industries each posted impressive gains of around 8.2%, while hardware and storage weren't far behind, clocking in a weekly return of 7.1%. Notably, the technology sector formed a bullish continuation candlestick pattern, signaling that the current uptrend is likely to persist. This pattern emerged during Wednesday's trading session, the sector reaching its intraday high of 3,456 points at 2:45 p.m. Eastern Time. The formation suggests that buyers are firmly in control and continue to push prices higher. Given the sector's strong momentum over recent weeks, we could very well see new highs in the near future. Shifting our focus to the basic materials sector, we observed moderate but steady growth throughout the week. The sector posted a 3.8% increase, equating to a market capitalization change of $28 billion. Selected materials stock leaders like Newmont Corporation and Agnico Eagle Mines were standout performers, with Newmont surging 6.2% and Agnico Eagle Mines climbing 5.7% by Friday's close. A particularly interesting development occurred on Wednesday, when a bullish engulfing pattern formed on the basic materials sector chart. This pattern, which materialized between 10:30 a.m. and 11:45 a.m. Eastern Time, indicates a potential reversal of the previous downtrend. The sector's low of 2,187 points was quickly engulfed by buying pressure, pushing the price to an intraday high of 2,234 points by the end of the trading day. Moving on to the energy sector, we witnessed an impressive performance that outpaced many of its peers. The sector surged by 4.2%, resulting in a market capitalization increase of $35 billion. Oil and gas exploration companies were the primary drivers of this growth, benefiting from rising crude oil prices and positive sentiment surrounding global energy demand. A notable technical formation in the energy sector was the appearance of a golden cross on Thursday. This bullish signal, where the 50-day moving average crossed above the 200-day moving average, occurred at approximately 1:15 p.m. Eastern Time. The sector reached its weekly high of 1,876 points shortly after, at 2:30 p.m., further reinforcing the positive outlook for energy stocks. The real estate sector also delivered a strong performance, posting a 3.5% gain and adding $22 billion to its market capitalization. REITs, specializing in industrial and logistics properties, were particularly robust, riding the wave of e-commerce growth and supply chain optimization trends. A bullish hammer candlestick formed on Tuesday's chart, with the sector bouncing off its low of 1,123 points at 11:20 a.m. Eastern Time to close near the day's high at 1,156 points. In the financial services sector, we observed a solid 2.9% increase, translating to a $41 billion rise in market capitalization. Banks and insurance companies led the charge. Buoyed by the Federal Reserve's dovish tone and hints of potential interest rate cuts in September, a bullish breakout from a symmetrical triangle pattern occurred on Friday morning, with the sector surpassing resistance at 2,345 points. By 10:45 a.m. Eastern Time, the consumer cyclical sector demonstrated resilience with a 2.3% gain, adding $29 billion to its market value. Home improvement retailers and automotive companies were standout performers, benefiting from strong earnings reports and positive consumer spending data. A bullish flag pattern resolved to the upside on Thursday afternoon, with the sector breaking out above 1,987 points at 2:15 p.m. Eastern Time. On the flip side, the consumer defensive sector experienced a slight pullback, declining by 0.7% and shedding $8 billion in market capitalization. This underperformance was primarily attributed to valuation concerns and mixed earnings results from some of the sector's blue-chip names. A bearish harami pattern formed on Wednesday's chart, with the sector failing to break above resistance at 2,234 points and closing near its intraday low of 2,198 points at 4 p.m. Eastern Time. The healthcare sector remained relatively stable, inching up by 0.5% and adding $7 billion to its market value. Pharmaceutical companies and medical device manufacturers offset weakness in healthcare providers and services. A doji candlestick pattern formed on Friday's chart, indicating market indecision and potential for a trend reversal. The sector traded in a tight range between 3,456 and 3,478 points throughout the day. In the communication services sector, we saw a modest gain of 1.8%, equating to a $15 billion increase in market capitalization. Social media platforms and streaming services were the primary contributors to this growth. A bullish Marubozu candlestick formed on Monday, with the sector opening at 1,876 points and closing near its high of 1,923 points at 4 p.m. Eastern Time, signaling strong buying pressure. The industrials sector posted a solid 2.7% gain, adding $32 billion to its market value. Aerospace and defense companies, along with industrial machinery manufacturers, were the standout performers. A bullish three white soldiers pattern emerged on the weekly chart, consecutive positive closes on Wednesday, Thursday, and Friday, culminating in a weekly high of 2,765 points. Utilities experienced a slight decline of 0.3%, losing $2 billion in market capitalization. The sector faced headwinds from concerns over potential regulatory changes and the impact of rising interest rates on dividend yields. A bearish evening star pattern formed on Thursday's chart, with the sector reaching its weekly high of 1,543 points at 11:30 a.m. Eastern Time before reversing course. Lastly, the private companies sector saw significant activity, particularly in AI, fintech, and cloud computing startups. While not publicly traded, these companies continued to attract substantial venture capital funding. With several unicorns reaching new valuation milestones, the sector's estimated value increased by approximately 2.1% over the week. In conclusion, this week's sector review highlights the dynamic nature of the market, with cyclical sectors like real estate and energy leading the charge while technology experiences a temporary setback. The Federal Reserve's dovish stance, coupled with positive economic indicators, has fueled sector rotation and created opportunities across various industries. As we look ahead, investors should keep a close eye on upcoming inflation data, trade policy developments, and earnings reports to navigate the ever-changing market landscape. Remember, the insights provided in this sector review are based on technical analysis and market trends. But always conduct your own research and consult with financial advisors before making investment decisions. Stay tuned for next week's review, where we'll continue to uncover the most significant market movements and provide you with actionable insights. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.